All right, well, welcome. And how I really envision the time that we spend together here, I would like for it to be really answering your questions. So what would be great is that if you are a current ProSuite owner, or if maybe you're brand new to ProSuite, ask whatever questions you have. The whole point of doing these live like this is so that you can ask questions and we can respond to them. Otherwise, we would just record a video and send it to you. So whatever questions you have, this would be a great time to ask those. Even if they're nothing to do with the ProSuite, maybe you have no idea what the ProSuite or what the tools are in the ProSuite, that's fine. Ask your questions and we'll see if it's something that we'll either answer in another training or if it's something that we might say, well, look, you could use one of the tools in the ProSuite for this. Again, ask your questions. That's the thing I'd really urge you to do. I'd love to spend my time here answering your questions. That's me. David told you a little bit about me. I started Day Trade Like a Pro. I run our map offering, and I also am working on these different tools that we've developed. We have others that we're working on developing. So just really trying to bring you stuff that I'm using in my own trading that I think is useful in my own trading. Most of what I'm going to show you here is not stuff that I developed or built, but stuff that I have learned, and the original creator, I actually purchased all of it from him. I just want to talk with you about what we're not going to cover today, and that is any of the introductory training to the tools in the ProSuite. You can find all of those if you go to daytradelikeapro.com. Under each of the tools that are in the ProSuite, you can find all of the training videos listed on those pages. It's all right there. So we're not going to be covering really basic things that are already in the training videos. What we will cover is we're going to go over what tools are in the ProSuite and then how you can use them to gain an edge in the market. And then we want questions, whether you're a current ProSuite owner or you are a prospective ProSuite owner, we want to have the questions from you. We're going to show you at the end how you can own all the tools in the ProSuite for life. And plus we have a $3,500 free bonus from us to you if that's something that you decide that you want to take us up on.
Give you two questions with some
Great,
context
let's go for it.
some questions. I don't think you got to address them specifically, but it'll be context as you go through it. One question was, what or how do you use the different tools in concert with each other, so complementary, and using them together? And then the other question was, is there a priority in how you think about the tools and use them? Obviously, prediction points governs everything, but do you have a priority in how you utilize them in your specific trading?
Yeah, good question. How do you kind of use them all in concert together? And then is there something that would take priority and come, and kind of work down from there, I think.
Yep, bingo.
It's a great place to start off. So if you look along the bottom of my screen, you're going to see I have a few different tabs here, and we'll work our way through some of those. But the one we're looking at right now, this is trade balance. This is nothing proprietary. This is really something that we built. We included in the ProSuite. I mean, anybody could mark off the trade balance levels on their chart. That's pretty simple. What you don't have that this does have is it has all of the analytics. So we're going to jump into that in just a little bit and how to use the analytics. But I'll just point something out right out of the gate, that 2% of the time the market trades in balance. And 98% of the time it trades beyond that. It's pretty fascinating. So we'll talk a little bit about that. In other words, if you were planning on the market trading in between what you see as the top and the bottom lines on there for the day, it 98% of the time won't. It'll exceed those. So we'll come back and we'll talk about that and how do you use that in your trading, and we'll go from there. So also we have one price. We're going to go through and I'm going to talk about all these, but I just kind of want to give you an idea. So we have trade balance, we have one price, we have backfill, we have key turns, and we have the box. And then if you're on NinjaTrader 7, you're welcome to use dynamic pivot. And I'm going to just tell you the secret is dynamic pivot is not something that we created. It was the previous owner created dynamic pivot, and here's what it is. It's literally the midpoint of the box, which I'm going to show you. So we would never sell that to you individually. It wouldn't be something that if you bought dynamic pivot, we would just say, no, don't do that, take the box. I think actually we did have somebody a while ago signed up for dynamic pivot and they already own the box. And I was like, no, don't do that. If you want it, we'll give it to you, but don't do that. So somebody says, does it work with Forex? And so I think that's a good question, and I'll bring all of this together here, is that most of these tools will work on anything. In fact, I think key turns work the best on stocks. So if you trade stocks or options, I think key turns work the best on stocks, especially because individual stocks tend to trend a lot more cleanly than, let's say, an index like the S&P or the NASDAQ or the Dow. So you get a stock like Apple and it can really trend, or Tesla and it can really trend. So stocks tend to trend a lot better, and key turns is fantastic on them. One price only works on things that trade overnight. So you can't, it's taking overnight trading data and then populating one price. So if it doesn't trade overnight, you can't use one price. So like for stocks, can't trade one price with it, okay? And I think that's the only thing that really, but other than that, it will work on, if you can put it on a chart, it'll work. It works on anything that you can put on a chart. So let's talk a little bit about, I think it's so, first of all, if you're here, you've probably heard of prediction points. So the first thing I'm going to say is that everything for me starts with prediction points. So when I go look at a chart, and if you watched yesterday's review video, because we do these in the morning and then in the afternoon most days, and if you watch that video, I talked specifically about how basically nothing had really changed, and prediction points really showed us that. The CPs were really close. They were within a couple of ticks on the upper ones, and then like a point on the lower one, and so nothing really changed. And so for me, it all starts with prediction points. It's the main thing that I'm looking at. That's the first thing I'm going to be looking at. So it starts with prediction points for me. And then from there, this is really out of personal preference. This is not like the way that you should do this. But for me, it starts at prediction points, and then what I do from there is I then go look at key turns. Key turns I have loaded on my chart. So you can see like these are key turns from today. And I'll explain key turns in a minute here, and we'll talk a little bit about what it actually means and what you're looking at. But that's the next thing I'm going to go look at. So I'm looking at prediction points, and then I'm looking at key turns, and then I'm looking from there, I can start to incorporate other things. So for me, the next thing is I would go look at backfill, and I'm going to talk to you about how to use all these together. I just kind of want to give you an idea. You know, there's things like prediction points. Almost everyone that's a member at Day Trade Like a Pro has prediction points and loves them and knows. It's like all the talk in the chat and everything, it's all about prediction points. What's funny is that there's a lot of other things. So key turns, people will talk about key turns. They'll say, oh, there was a key turn there, or there was a one price there. And that gets talked about a little bit. And nobody really talks about backfill. I mean, Omega Knight said in the chat today, he said maybe some training on backfill because it's not something he's really ever looked at. And he's been with us, you know, for quite a while now. And so I think that probably summarizes backfill for most traders that are with us, is they don't really even, you might even own backfill and not really know what to do with it or how to use it. Or so we'll talk a little bit about this. But what's interesting about backfill is that depending on the time frame that you have it on, you're going to get different prices. And basically, what it's telling you is where big institutional money is likely to bring the market back to a particular price. And so I'm going to talk about using it as targets, and then I'm going to talk about how to also, depending on the time frame that you're using, how you could use it for like a supply and demand area. You might think about it like support or resistance, but it's probably more accurately thought of as, I'm not really a support or resistance kind of trader. Like I think if something's really been established as support or resistance, it's probably not super useful. I want to know where there's, if I'm buying, I want to know where there's demand, where is the institutional money likely to be buying? And if I'm selling, I want to know where's supply, where are they likely to be selling? And so I think that backfill can be a good way to use that. So I kind of go prediction points, key turns, backfill, and then I'll look at one price, and then trade balance populates as the day goes on. And so that's something I'll pay attention to. And then I've been doing a lot of training on the box. We'll probably spend the least amount of time on that because we've been putting out a lot of different content on that over the last little while. And so I want to talk about some of the ones that we don't really talk about all that often. That's kind of for me how I'm looking at it. A couple of things. One of the things that I'll look at is I look at where might you have, sometimes it looks like this. So I'll go, if we looked at prediction points today, we had this prediction point right here. We had a CP at 32.50. And then notice we had this at 35.50. We have key turns. So what's key turns? Key turns is basically a bias indicator. So a lot of traders, especially in the beginning, a lot of traders don't know whether they should be buying or should be selling. And key turns, I don't have the old version, which was the DOP, which you have to have loaded on a daily chart. And it's still available. You can get it and you can use it. And I've even had people ask me about it, and I just tell them, just don't worry about it. It's just so much, like it's so open to interpretation. It's very difficult. And so key turns is basically the version, so there's DOP, which was direction of price. That's what it stood for. And then you have key turns, which was basically taking out all the ambiguity of that, and it just said, here, above this price, you want to be a buyer, and below this price, you want to be a seller. One of the things that I love about using tools like this, or I'll even, for example, like using prediction points, a lot of traders you can draw in your own support or resistance or whatever. But one of the things that I personally love about it is that you don't have this, there's no interpretation. It's not like, well, I think that's a pretty good support area, or I think this is a pretty good resistance area. It's generated by an algorithm. And so I don't have to try and guess and think maybe this is a good spot or maybe this isn't a good spot. I'm just really comfortable relying on that at this point. So one of the things I like about key turns is that point of what I just made. So if you look at key turns, basically what's this telling you is that right here, this red and green on my chart, this one right here, is the original key turn price. And there didn't used to be three prices like this. There was just one. And it basically said above this price, we want to be a buyer. And below this price, we want to be a seller. That's it. Really simple. Hard to make it any more simple than that. What we added to it is these extensions basically, which you can see, they vary, and sometimes there's one. So sometimes on key turns you have one, you have two, or you even have three prices. You don't ever have more than three, and you don't ever have less than one. But basically up here we're buyers, down here we're sellers. That's how this is built to work. So if you look at this, the way that, so if you can bring that in to using it with something else, so maybe you just trade price action, but you're looking at, you can see, these populate here at the beginning of Globex, and then here you go. So this was the original one, and then we have these extension prices. So how I would read this, if I was looking at this chart like this, I would read it like we would really want to take out this if we were going to go higher. So basically I look at it like there's these three areas that we need to take out if the market's going to go higher today. And you can see they just never really could. They probed this by, so what do we have? They probed it by 6 ticks, but they just really couldn't get anything going there, right? So those three areas. Now, I would also look at it like if I was here, I'd want to be a buyer above here and a seller below here. And then if it broke below here, then I would turn into a seller. This is if I'm just using key turns, and that's the only way I'm looking at it. Okay? Now, where are you selling for? This is where something like backfill. So for example, if you go right here, so this is 22.50. So this is a 10-minute chart. So we could go down to something a lot smaller, like a 2-minute chart. That's going to take a minute to load. At 2250, it says, okay, you could be a seller, and where are you a seller for? Here's your 2-minute chart. So this is from the beginning of Globex over here. You get this move up, and then really close, we get 2 ticks away over here from key turns. It comes back. And I think it's using this indicator, or any of the indicators, is knowing what, if you were a carpenter, you wouldn't just carry a hammer around everywhere. You would know what, you would have different tools for different jobs. So this is something that can help give you a read on, do I want to be buying or selling today, and how strong is that momentum for one side or the other side? What this is telling you, what Key Turns is telling you today, is that primarily, unless you can break out up above here, primarily you want to be selling. And that would have worked out really well today. Never broke out up above here. Could you try buying and scalping on this side? Absolutely you could. But overall, this is saying if you can't break up above here, you want to be a seller, okay? I'm going to bring this real small here so you can see. So here's yesterday's key turns, and this one held basically within a couple of ticks right there. A lot of times this will happen where it'll hit to the tick, but I wouldn't get too worried about that. It's really pointing out an area where you want to be watching, okay? Basically for me here, I'm thinking I want to be a buyer. Maybe I'll try and scalp on selling down to here, but ultimately I want to be a buyer. And then look at how high this would have to travel. So from here, it would have to travel all the way up to here. So between here to here, I want to be a buyer. And I'm just looking at it like, well, which side is there more room on? Well, I want to be a buyer ultimately up into that area. So this, would have worked out. And then look at the day. It changes. And okay, so if we can't get up above here, I probably want to be a seller. And then I can be a buyer down here. I could be a seller up here. And then I could be a buyer down here. And then this breaks and goes lower. And then it's kind of a little bit of a tight range in here, 5.5 points. So I don't know that I really want to try and go crazy or do too much in there. So let's look at a couple other things on key turns just to show you an example. So here's one of these where they're stacked up together. So you actually get like 3 different ticks here because these two overlap. But you can see, I mean, look at this area here throughout the day, how this trades right around here. So it comes up, punches through here a little bit, comes back down, comes right down here, holds to the tick, comes up here, holds right here, makes a move higher, comes down, pauses, breaks through it, comes down to here, comes back up to here. And again, I don't trade stocks, but if you trade stocks, I think Key Turns is it's a really great tool particularly for using with the stock. So let's go back and look at today. I want to just show you an example from today of how you might use these together. So this is 2250. So if it breaks 2250, what do I want to look at? Well, backfill, let's jump over and look at backfill. So I have an hour chart here, just a 60-minute chart loaded on backfill. It's going to give you different prices. If I go to a 1 minute, I'm going to get a whole bunch more prices. If I go to a 5 minute, I'm going to get more prices. If I go to a 10 minute, I'm going to have different prices. So it's based on the time frame that you're looking at or the interval of the chart. It's going to give you different prices and different levels. So if you look here, we have analytics built into this. This is over the course of a year. There's a year loaded on here. Over the course of a year, there's 510 levels, and 97% of the time the market comes back to those levels. So if you had prices on your chart that you knew that 97% of the time the market was going to come back and hit those levels, I mean, would you want to know about those prices? That's really the question. Backfill can be fantastic as trading to a target. So using backfill prices as a target. So if you look right here, we have blue is going to be where the market needs to come back to. So it's going to be blue if it breaks up above it. It's going to need to come back to it. And then, so it breaks below it, we're looking for buyers to come back up to it. Red would be it breaks above it, we're looking for sellers to come back down to it. So right here, if you look at this, And I'll just mark this off so that it goes onto the other chart as well. And right there, if I mark that off and I go to key turns and I say, so if I go, all right, so key turns, if we break below 2250, what would be my target? Well, let's go see where backfill is. 1250, and that populated 3 days ago. There's an 81% chance it's going to hit this today. You see that? I want to just pause for a second there. Do you see that? So somebody said 97% of the time within a year. Yes, technically, 94% within 20 days, 92% within 10 days. So these are going to get hit. Yes, over the course of a year, 97%, but forget that. You can throw that number out if you want. In 20 days, it's got a 94% win rate. Okay? As it goes on, the chances of it getting hit get better. So if you were a seller, there's an 81% chance today that 12.5 is going to get hit. If it didn't get hit, like this one, and goes into tomorrow, there's an 86% chance that it gets hit. Now, that doesn't mean that you just, sell everything and wait for it to drop down here. It doesn't mean it's going to work like that at all. So you could still got to have entries and know where you're getting in and managing that trade. But this gives you probabilities of certain things happening. And so if you go, well, 12.5 is there, and there's an 81% chance historically. That means if you take this trade 1,000 times, 810 times, it's going to come back and hit this level. So if I'm shorting from over here using key turns at 2250, where's my target? Well, my first target would be right down here at 12.5. Now, what do you notice? I'm going to just do something. Oh, not there. Let me do it here. When I pull this like this, you can see there's these crazy prices that take a while to get filled sometimes, like these. But I mean, some of these, look at this one, 4,042 or 4,035. And this took from April 5th until May 13th. But here's what's amazing. From 35, it went 100 points. It went to the all-time high and came all the way back to it. Depending on the kind of trader that you are, and there's a lot of backfill prices along the way over here. But one of the things that I haven't ever really had the time to do is develop an options trading strategy around this, which I think would just be fantastic. Because I could be buying a put, the further this goes up here, the cheaper these puts are getting. And I know that there's 94% chance for coming back here within 20 days. So if you are into trading options, that's something, you could look at that. I just haven't had the time to really build it. But what do you notice right here? So came down and hit this 35. What do you notice right here? Reversal, right? Look what happens right here when it hits this backfill price right here. Reversal. Look what happens when it hits this one. Reversal. So look what happened right here. So you had these two backfill prices. I'm not saying you want to just buy or sell these all blindly. They're really targets, but I'm trying to show you another way that you might use them. So notice this right here at 0650 right here. So what happened? I mean, just follow the logic for a minute. If there was institutional money that got, let's say, left here, when the market came back here and it didn't take off out of this area, what would make sense? It would make sense that so it broke right below it. So maybe there was institutional money here when it happened, and then it wasn't here when it came back. Look where the market came back to, right here, back to this 06.5, and then sold off from there. So this sells off down from here. So really one of two things can happen when it comes to a backfill price. It either stops and reverses, or it blows right through it. And if it blows through it, if it comes back and retests it like this, could be a good opportunity to get on it on the other side. So let me show you something that you could utilize for that. This is the candle where this price was generated from. Let me go out here a little bit. We're looking at a 60-minute chart. You could do this on a 1-minute chart. I'm just showing you on a 60-minute. We can go down to a lower time frame. I just want to illustrate the point here. and show you the principle because you can apply it to anything else. I would take and highlight this candle right here from there to there where this backfill price populated. Look what happened. It traded up into here and then it dropped out of there. So that's one of the ways that I would look at that. So here's a good example again right here. So we have 89.50. I'll just show you how this, so 89.50, it blows through it. Oh, so we get the price generated right here. It comes down, comes back up, blows through it. What happens? Comes back, stalls out right here. This is 2 hours. So if it's not getting out of here and it's at the end of Globe, or this was at the end of the day, beginning of Globex, maybe not the best level, but you can still see it does come back here and stall out here for 2 hours. So not trying to paint a picture of that it's perfect all the time, because you're going to encounter real scenarios like this where you got to trade and be able to manage the trade there. I want to point out here again today. So what did you have here today? You had this 12.5 got achieved. Did you happen to see where this stopped? So we've been talking about this example. The market right here comes down, blows through this area. There's a backfill price, gets generated at 89.50, and then it comes back and trades back to it right here. All right. So 89.50 gets traded back to it right there. Now, when it comes back to it, I was just pointing out right here, we could look to be a buyer right there. So let me point this out. Here's 05.75 right here. And when the market came back to it, anyone know the low of the day today? 05.75. So here's your backfill price right there, gets generated. Market came down right here, or came right back up through it right here, didn't really pause. Okay, so when they came back, big money's trading there again. It ripped out of that level. To the tick right there. Now it's not always to the tick. It's nice when it's like that. It's not always that way. But probably the bigger and stronger this move is through it, the better buying it over here would be, if that makes sense. There's a question about you can extend it. So in the indicator under the settings, you can, so historical lines, you can extend the bars you can extend it as far right as you want. The only thing is you don't technically know. So I could say bring those 100 days forward or 100 bars forward. I just don't technically know if it's already been filled. Whereas right now, it's on 0 by default, which means it ends when it gets filled because we're looking for backfill. So we're looking for it to come back and fill it as soon as it's filled. But yes, I mean, this is an example of what I've been showing here of that we have backfill at 0575. It comes back up. What did I say? It can do 2 things. It can reverse or it can blow through it. It blew through it. It came right back, tested it to the tick, and then took off.
And just to solidify that point, Ephraim, I think what you're saying is that when there's a backfill price that gets blown through, you may want to be looking for that price to be either a big supply or demand area when it comes back to it in the
Absolutely.
future. You're not necessarily saying extend all backfill prices into the future. It's only if the backfill price gets blown through, then you can look out for that in the future as a very important price to look for.
Yeah, and at some point, how I would think about it is that, how I personally would think about it is that at some point, big money is probably going to get engaged there on one side or the other, right around that tick, if not at that very tick. So I'll give you an example of like this one, which did kind of get blown through and then came right back and kind of like died out right here at 89.50. And so I'll show you what I'm talking about on here. So see, like, this is at some point here. What would be interesting to see now, let's go back and find 89.50. Basically, you can see big money starts getting involved right here. And if we look, what's this, 87.75 right there. So I'm just kind of looking at like right here, I'm just watching right around here, given that this is where the price was. They blew through it right here. They came back, held, couldn't get away from this. So I'm thinking big money's not really selling it here. Not really breaking out up above it, but at some point I'm thinking on one side or the other side of this, big money's likely, very likely to get engaged and start, and move this thing. That's how I'm thinking about it. I'm not saying you should just extend all of them forward. So that's a great point. Also, I just like knowing like if this correlates with another number, like we had a CP today, we had a prediction point at 10. And if I have, let's say I have 12, let's just say I had a CP at like 14 and I have backfill at 12.5, I'm going to be paying some attention to backfill down here at 12.5. And you could really build it's really about finding what works for you and building your strategy around it. But I'm showing you the 60-minute chart because it's what I have up on I want to know these really important levels. That's what I'm looking at. I use a 60-minute chart, not to say that you couldn't use a lot of different charts because there's not that many levels on here. By the way, let me show you, if we go to something, we're going to go to this is a 10-minute chart. So this is a 10-minute chart, and right here you can see there's 1,226 levels. Have a 99% fill rate, 95% in 20 days. So 62% chance price is coming back to a level that day if it on a 10-minute chart. So you can see this one right here. We've got this one right here. So this is not really super useful. This one, the market came down here. So if I'm looking for a bounce, oh great, we bounced back up into here. So this is from today, by the way. That's 20.5. Backfill price. We're bouncing off of a 60-minute backfill price at 12.5 and back to 20.5. So there's 8 points. If I just went from this backfill to that backfill, that's 8 points. That's one way you can utilize that. So 10-minute chart's going to have a lot more prices. You can start to see how some of these work, how the market reacts here around some of these. Oh, I think did I draw that in? Get rid of that one. So what do you have? You have these backfill prices, and then see the market comes right. So you see this when it's dropping. This is one of the things that's when you go to a lower time frame. It's dropping, it's dropping, it's dropping. This is telling me that it's likely that it isn't making one big swoop. We're getting all these different backfill prices along the way down here. Notice how, look at what's happening here. You basically have, and we're just looking at a 10-minute chart. So if you went to a different time frame, but look at what happens. On this one, it's literally 0550. It bounces back to the tick right there, and then drops from there. And then this one gets generated right here. It does come back up a bit right here. And then here we have another one. This one gets filled. That's not super useful. This one, about in the middle of this candle, 94.5, tested to the tick, drops again. This one, 84.25, came down, broke through it, came back up, 84.25, and then dropped like 20 points from this backfill price. So could you find a way to scalp that and turn that into a profit? I really, really like this one just from a structure, like, how the market is structured here around this. It's just kind of unfortunate the timing worked out the way that it did. Because the market blew right through this price and came back to it, but it was just the end of the day and there was nothing, there's nothing happening to make a run and push from there again. But I really like this one, how the market just goes right through it. It makes it more appealing to buy it on the way back. So this is a 10-minute chart. We could go to volume charts. We could go to tick charts. We could go to a 1-minute chart. I'm going to, I'll do that. This might take a minute to load, but, let's see. Okay, there's 2,969 levels, 97% fill rate in 20 days. So today, not a ton going on here today. So here's one, here's another one. By the way, 1 minute. So depending, again, how do you want to trade this? So if it came down here and you want to be, this might still be loading. But look what happened right here, 11.75. There's your backfill price. Let's zoom in on this. Here it goes. Here's backfill. 11.75 generated right then. It populates. It blows through it. It keeps coming down here, right? This price is, populates over here. It comes back up to it, blows through it, comes back, tests 11.75 to the tick, and takes off. Never looked back. That was off of the low. Same thing right here. I mean, it didn't get it to the tick, but here's 21.75, and this pulled back right here to 22. So 1 tick away from there, and then took off. And see, I mean, if you're buying, so again, if you're buying a bounce, there you go, 21.75 back to there. But I think you're getting the idea. 66% in a day, in the first day, 91% in 4 days. That's going to be because the prices are going to be closer together, if you will. I mean, it's not going to be as far away because it's a 1-minute chart. It's not going to be as far away from the market most of the time. So going to be smaller, smaller moves. So what do you have here? See this coming off of right here. See that coming off of right here, moving up to there. You have to think, in time frame, what's going to be relevant. There's a question about how to manage a trade. Let me show you something. If you're trading a momentum trade like this, here's your backfill, comes down, comes back up, blows through it, comes right back, tests it to the tick, and then can't get more than a couple points away, 1.5. Okay, that's not the trade. Came down, came back up, broke it by 1 tick right here, and then dropped again. And where did it drop to? Down to here. And see, this is like you're at 23.50, 23/4 the backfill price. There's no leniency. It either hits it to the tick or it's not filled. So as long as that price is still hanging out here unfilled, this came within a tick of it, not low enough though. So it's still hanging out there unfilled. So that's a bit about, again, another really great example, I think. So big, strong move. Here's 4,200. Market keeps going, pulls right back to it. Big move off 4,200. That ends up running, 23 points up to there. So these kinds of moves. So that's something with backfill that I like.
No, I think you covered it. I think, the break and the retest, that's a really interesting one for targets that I've looked at. And I know some people that scalp a bit use that 1-minute time frame as well, like you were walking through, or the shorter time frame for some scalps.
Yeah.
And
yeah, and you can literally do it on anything. I mean, you can do it on literally any.
The one other piece of backfill
any
that's
kind of time frame
interesting that I did use for some time, but I don't use it anymore, is the buying and selling pressure.
Yeah, so I didn't put that. Let's go to like a 10-minute chart and just show that. So this is a feature. Yeah, I'm glad you brought that up. I didn't want to load it on that originally because I thought it might be a bit.
Yeah, I agree.
Bit much to see at first. Okay, so all this is doing is it's showing buying and selling pressure, and it populates in real time, as real time as possible once the signal's there. Right here, this is saying there. So look, I mean, if you just look at these, this is on a 10-minute chart. So it's saying selling pressure, and there is a retrace, or there's a pullback from here. Selling pressure, it does pull back. Selling pressure, one more tick up, and then it pulls back. It says buying pressure, and pushes up from there. This says buying, one more spike down, comes all the way up here. This says selling, one more candle up, and then down. Buying, that's the low of the day today. If I have something like I have a, if I have a backfill price, or I have whatever, or I have a prediction point or whatever, this is basically telling me there's pressure here for buying. Now you can see, we could go to a really high time frame and you can see like this can go on for a while, but eventually this is going to crack and you're going to see this move. This can be saying it could drop 100 points, and it could be saying there's buying pressure. And what you're going to see is that pressure builds and builds and builds and builds. It's like a pressure cooker. So the more that it's building and building and building and building, you might need to take a few swings at it. You know, this one, I mean, selling pressure, retracement, shouldn't lose money on this. Selling, retracement, shouldn't lose money. Not saying you're making money, but you shouldn't lose money. Selling, definitely shouldn't be losing money up here, okay? Here you go, buying pressure. That's what I'm saying, it builds. I love this. So here's one thing I'll say about this, and I didn't really prepare a lot to talk about this, but here's one of the things that buying pressure, see that? Buying, 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 buying. It's telling you there's all this pressure to buy. And then what happens, you get this one more push down here, and it says buying pressure, but there's all this buying pressure. So it's like I said, it's like a pressure cooker. And the pressure keeps building and building and building and building, and then all of a sudden it's just like boom, and there you go. So you might have to try it a few times. It's okay. But then eventually it kind of just cracks and it just, explodes out of there. See? Selling. So you see all this selling pressure coming up here. And this works really well when you have a target, like a backfill target, and you go, oh, there's selling pressure. Now you got to figure out 25 quarter down to 23 quarter. Is that enough for you to take that risk? No, it's 2 points. For me, that's nothing. Okay? So I'm not going to take that. But if I get selling pressure up here at 32 and my target would be 23, it's like 9 points. Okay, more entertaining. I'm like 9 points. That might be worth taking some risk. So, different story there. So same thing. It's dropping and it's saying, oh, there's all this buying pressure. And what do we have? We have targets back up here. 84.75. It probes down here. 77. Great. Boom. There you go. So buying pressure. As this is dropping, doesn't mean I'm just going, great, let me just buy. Look, all these backfills are getting hit. So it's saying there's buying pressure, but all the backfill targets are getting hit, except this one. And this one. And I start getting really interested when we have this one here at 89, and then there's buying pressure, but we don't get back to it. And then buying pressure, but we don't get back here or here. And then buying pressure, and it's building and it's building and it's building. And then this does get us back to this one, and then the pressure really builds. So you have all of these. So just think about this as like the pressure cooker all of this time in here, right? All of these that are happening, all this, building pressure, and then it just sort of pops right here. Where's it going? Back up to there. So if you have something else that you're using, like let's say you were using the box or something like that, you could be trading it up into there. So you could be going, okay, great, there's buying pressure. I get a buy signal on the box. I can trade it up to there. I think I have pretty much covered what I wanted to cover here with backfill. I mean, I think it's a phenomenal tool, I think it's like one of the best tools that we have that no one talks about. Okay, let me talk about one price just for a minute here. One price is really simple. It's one price. It populates in the morning. So my time, it populates at 5 a.m. Pacific time. It's taking overnight trading data, and it populates this price based on overnight trading data. It's basically like a magnet. You can see that out of a year, out of 260 trading days, it fills on the first day 73% of the time. And within 20 days, it fills 94% of the time. So I think the important thing is this price is going to be like a magnet, pretty much. This price is going to be a magnet, okay? That's something that the market's going to likely want to keep coming back here during the day. So what you can see, so let's just look at a day like this. Here's the price generates right here at 5, and it's 22 quarter. And then the market goes all the way up to 32.50. So it's like a 10-point drop down to here, and there's a 73% chance that's going to happen. So if I like it short, we also happen to have a CP right up here this day. So if I like it short, I can short the CP on the prediction point down here and I have a 10-point target. You notice how it just kind of tends to keep coming back here. It really is like a magnet. I mean, it just kind of works that way. So this one didn't get filled this day, but it did get filled over here. See how far it came down and then came all the way back up here. So I love this. I love when it's like, okay, 04 and day 2, there's an 82% chance this is going to hit. And it's at 04 and the market came all the way down here to 65. So how much risk could you take on an 82% probability of the market going from 65 to 04? Next day it's even better, 85%, 87%, 92%. It's almost like the further away this gets, the better the trade gets. So that's one way that I'll look at it. Again, here, moves away, next day comes up and hits it, takes off from this level. And this is hard to complicate. I mean, this is how it works. It's a price, it populates on your chart, and you can see like today, 26.25, and it was just hard to ever really get, it dropped, came right back to it. I mean, and that's most days. If we go back and we look at it, most days the market has a real hard time getting away from this level. Traded around, here, kept coming back, kept coming back, kept coming back, traded around here. So it really is just kind of like a magnet for the market. You can see that because over the course of a year, in 20 days, if it doesn't hit, 20 days, 94% fill rate. So there you have that, and then so let me show you something about trade balance. So trade balance is basically you have the first 30 minutes and the first 60 minutes. So right here you have the high and the low of the first 30 minutes and then the high and the low of the first 60 minutes. And you can see that 52% of the time you're going to trade outside of this. You're going to trade outside of that 98% of the time. So the market almost never trades inside of that range of the first 30 minutes to an hour. Now what you could do, something that could be kind of useful to know, so if I go into my data series and I load this and I say, I just want to see the last 5 trading days, it hasn't traded in balance one day in the last 5 days. In fact, you can see it's been pretty interesting. So you have the high and the low. It's half the time it's trading above and half the time it's trading below. Can you figure anything out from that? Maybe it's been in a range. Half of the days it's trading above the first hour balance, and half of the days it's trading, so half the days above, half the days below. Literally 50-50 in the last 5 days. That tells you something. If you want maybe you want a little bigger picture, you can go out, you can say 10 days, what's it done over the last 10 days? So over the last 10 days, again, still not trading in balance. And it's breaking the high of both of these. So this is telling you if it's broken the high of the 30-minute, it's broken the high of the 60-minute. And same thing over here on the low. But overall, the last 10 days, the market's been trading above the extension the majority of the time. So there's a number of different ways you can use this. You can, once you see these are established, I mean, you can draw these levels in for yourself. You just don't get the analytics with it. And the analytics, I think, are, can be really helpful. What's it doing the last 20 days? Still have not traded in balance the last 20 days. And you see it's about split. It hasn't really, so again, over the last 20 days, it's up and down about equally. So nothing real strong happening there either way. David, I see you're answering questions. Anything for me to catch up on?
The one thing that keeps coming back to me, and I know when I use these tools in my trading, the biggest thing is, you say this all the time, is when you're trading, you need to know where the market's going to, your target, and where it's coming from. And one of the great things about these tools, especially when you put them together, you really get some very clear targets, and some of these targets may be 20, 30, 40 points away, where then if you can find a way to get in with a few points of risk, your risk to reward is phenomenal. And maybe you don't win it, 100% of the time, but when you have the right risk reward on your trading and you have the analytics to back it up, it takes the emotion out of your trading. I know Kuba talks about that all the time in his course.
Yeah.
Take the emotion out of your trading and with the analytics and statistics and information to back it up. So really complimentary from that standpoint.
Yeah, it's good. So I want to do something here. This is not a training for MAP, but I know we have MAP members on here. And I want to show you something that when you talk about trade balance, right here. So yesterday, let's just look at yesterday here for a second. Where was the CP here yesterday? It's 42.29 quarter. We had a CP right here. So this is the power of, 29 quarter, right? So we talk a lot about, like we did the webinar with NinjaTrader, and we talked about how things are, I mean, even all of this, I mean, it's all lagging. I mean, even the stuff, like trade balance is lagging for sure, right? Backfill is reading price action, so it's lagging. Key turns is, but backfill can be a leading indicator, okay? And then key turns, I would say, is a leading indicator. And then look right here. So we had 29 quarter, look, and then I just want to show you something, a couple of things here, and we'll wrap up a couple of things here. So right here, 17 quarter, this is from MAP yesterday. So you see that 17 quarter right there. And then we talked about 21, but I think I said more like 21.75, okay? Now look at where these are. This is 20, this is 22. So here's 21.75. That was the first 30 minutes. And then we said 17 quarter, the first hour low was 17.50. To just, for the people in MAP, we're literally, you have these levels before they happen. We gave you all these levels before the market opened. And then they show up on the trade balance. You think that's coincidental? You think it's coincidental that trade balance, the high of the first, the high of the trading day here of RTH is 30.5. We said 29 quarters, so off by 5 ticks. 22, that's the low of the first 30 minutes of trading. And we said 21.75 in MAP before it happened, before the trading was happening. This is telling you what's happening after. And then 17.50 ends up being the low of the hour. And we had 17 quarter ahead of time. Just to kind of, we'll talk about this more in some of the MAP trainings that we do, but I mean, it's all there. It's all in MAP before it's even happening. It's pretty, to me, it's pretty remarkable. Okay, so I want to show you this because I think if you could only buy one thing and you are struggling to be consistently profitable, I think the box is the best thing out there for people. And we ran a special on this, but basically this is a little different version of the box than what you see, and the only difference is the targets are just 1-to-1. So this would be, whatever the space between this box is the space up to here, okay? So what I'm looking for is basically I want to buy here and take my profit up to here. It did hit that second target right there. The box populates, and then it's taking a measured move of the box for the target. So here's your target down to there. So this is today. Tried a couple shorts, and then it got the long up to here, and then there was the short down to there. If you go back and you look here, here's the final. This did give you. Let me fix this real quick so you can see. I haven't changed that because I don't need it to tell me. Okay, so there's sell, sell, sell. So it said sell, and then there was a buy signal that didn't work, and then there were 3 sell signals. No buy signal in between those. It's just each time a new trade qualifies, it tells you. And then finally that sell did run quite a bit here. And then here's a short. That one obviously worked. Here's a short. This one worked. Here was a short opportunity. It came one tick from the target. Don't turn that into a loser. This one didn't quite work out. Don't turn that into a loser. This one you probably wouldn't have gotten because it kind of blew right through here and then never looked back. And then this one, the buy actually did work. So, I mean, I'm not going through here and picking out the best looking trades. You're just looking at a 1,000 tick chart, and anyone who has the box could do that. Sell signal, that does hit the target. Buy signal, that hits the target right there. It goes to the second target, so that would pay 2 to 1 on that. Here's a buy signal right there. That one does go hit the target. To me, you start using this in conjunction with other things like if you're looking at backfill prices or you're looking at where there's buying or selling pressure, those kinds of things. You can go use it with key turns. It's just so versatile. It works with pretty much anything. And I love using it with prediction points. I could do this all night. I'm not sure if my wife would be okay with that. But I want to make sure if you have any questions here before we wrap up, I want to show you, if you don't own the Pro Suite, I want to show you how you can get it. But I also want to see, are there any questions that we want to address before we wrap things up here?
Nothing new coming in.
All right. All right, great. All right, so here's what we're offering. So the Pro Suite is really any of the tools that I showed you, they're all available. You can go purchase them individually. You can purchase them annually, or you can purchase them for a lifetime subscription. So annually, you got to pay every year for it. If you want to keep it lifetime, you pay one time. It's yours for life. It includes any updates we make to it, all that good stuff. Okay. So you'll get lifetime access to all the Pro Suite tools. So let me show you what all is included in that. So that would be backfill, the box, AutoBox, which we didn't really even talk about. Basically, AutoBox, it's not a black box system. You install the box and it will execute the trades for you based on the parameters that you set up. It's really meant to get you into the trade without you hesitating and doing a lot of work, or like if you can't be there or whatever, but really meant for you to manage the trade. Okay, that's really the important thing. One price, and then trade balance and key turns. And then we also didn't go over the prediction point bias, but that's something that you need a active subscription to prediction points, and it's really a phenomenal tool. It's something that it took a few different things that I would use in my own trading around what would make a trade a higher probability. Basically, for me, it was a higher probability reversal trade using a prediction point. And then this gives you a bias. And instead of you having to go look at 4 different things, and really it's probably more like 9 different things, and instead of you having to go do that, it does it all for you. And if all 9 of those things are there, it tells you. There you go. And it'll give you a buy or a sell signal. So there's training that's available on that. You can go check all of that out. These are all real prices. These aren't like we didn't make these up and then say there's people on this webinar right now that paid these prices for these products. So this is not something that we're like, hypothetically someone might pay $24.97. I mean, I'm looking at names of some of you here. Some of you have paid $24.97 for some of these different tools. So if you bought all of them individual, it would be $17,479 for the whole Pro Suite. And we think that's silly and that you shouldn't do that, and you should just buy the whole Pro Suite together. So here's the offer. Instead of you paying $17,479 to own these for life, you're going to pay $59.97. You're going to get a year of prediction points for free. That's $3,500. A year of prediction points for free. That's going to give you access to the Discord server. You're going to be in there with us. You're going to be talking with other traders. We'll work with you on helping you learn how to use the different tools in the Pro Suite. It's over $21,000. It's $59.97. So if you don't have the Pro Suite, you should go sign up for it. It's daytradelikeapro.com/Pro Suite. Just a phenomenal value. If you don't do that, you could go buy them all individually if you'd like, but I would suggest that you just go get the Pro Suite and get prediction points free and save yourself, like $15,000 by doing it this way. That's the deal. If it's for you, great. If it's not for you, that's great too. Really, the point of it here was I wanted to show you how to use some of the different tools and then just show you how you could, I know there are some of you that want to go sign up for it. So just to show you how you can go do that. We think any of these are enhanced with prediction points. So giving you prediction points for the year. I would love to have you if it is a fit for you. We'll try and do some more training throughout the month here and show some of the different tools. The last thing I'd say is just thanks for being here. I love doing these trainings. We're really working on doing a lot more of it and more live trainings like this. So, thanks for being here. It's really your questions and your engagement that make it great. So thank you for that. David, is there anything you want to say to send us home?
Two things. One is, yes, absolutely. Thanks everyone for being here. You'll get an email in a little bit with a link to how to sign up. The other thing I'd point you to, and I'll highlight this in the email that goes out, is each of these tools on their specific product page has a ton of training on it and strategies around every single tool. So I'll point you guys to all of those so you can go and look at that at your convenience. And then secondly, if there are other topics from a training perspective that you guys are interested in or want us to drill into or focus on, let us know. Reach out to us on Discord, send an email to support@daytradelikeapro.com. We do this for you and want to make sure that we have topics that are relevant in supporting your trading. So thanks again for being here. You get an email with all the details. I think that's a wrap.
Okay, thanks again.
Thanks, everyone. Bye-bye.